What's up everyone, Dylan here. I wanted to hop on for another episode of the weekly analysis video. With that said, we'll hop right into it. Before I get into the analysis, I wanted to make sure that everyone is aware of how important this week really is. Citadel calls it the Super Bowl of earnings. Starting tomorrow, which is Wednesday, July 30th, after the close, we have earnings from Meta and Microsoft. Going into Thursday, you have Apple earnings as well as Amazon earnings. So those four names are all within the Magnificent Seven stock basket, okay? And just to put it into perspective of how much influence those names have, this is for the Magnificent Seven as a whole, right? And you could go ahead and read that, but in plain English, all four of those companies that report earnings Wednesday and Thursday after the close have the ability to really make an impact on overall market sentiment, okay? Aside from the packed earnings calendar, we also have a very packed economic calendar as well. Starting tomorrow, we have GDP at 8:30 a.m. Eastern Time. I didn't put it in this particular post, but tomorrow, also at 8:30 a.m. Eastern Time, we have this, right? The U.S. Treasury quarterly refunding announcement. That's very influential, okay? So besides those two things, we also have the Fed event tomorrow at 2 p.m. where it's very likely that Powell will not cut rates tomorrow, but what's very important is to listen to his dialogue in terms of what he plans on doing going forward. So you'll hear the Q&A part of the Fed event during the press conference at 2:30 p.m. Eastern Time tomorrow, and usually that can be very volatile, okay? Thursday, you have PCE at 8:30 a.m., and then Friday, jobs report at 8:30 a.m. Eastern Time, as well as some other things at 10 a.m. So this is just a little summary from Bloomberg. You can see Wall Street pros are staring down a pivotal week that will likely set the tone for the rest of the year in markets and the economy. Okay, so very important to be aware of these types of events and understand that they do have the potential to increase volatility and also change the trajectory of where the sentiment moves to. Okay, very important. So I'm gonna take a step back to Sunday night. Sunday night, the indices, both S&P and the NASDAQ, gapped up to new all-time highs following the EU and US trade deal. Okay, and since then, the S&P has come off, which is actually very healthy. The reason I say that, I'll come over here to pre-market plan from Monday, right? We could see right here with last night's move, ES is back in overbought territory on larger time frames. Adam Prisafulli commented this morning that, you could read it, right? Basically, he's saying that there's some hesitation about chasing stocks at record highs, okay, in the immediate term. So I said this is a byproduct of being overbought on the larger time frames. Best case for bulls would be RSI resetting. Remember, there's two ways for that to occur. Either A, the indices can move sideways, or B, the indices can pull back. And that is what we've been seeing. Okay, so by the RSI resetting, what does that do? It sets up for the indices or the bulls to kind of take a breather and kind of build back that momentum to potentially move back to the upside again. Okay, that's just a potential. I'm not saying that's going to happen, but we'll get into more specifics. So you can see, as of Sunday night, the S&P, the RSI on, call it the 4-hour, right, which is technically in my eyes a longer term or medium term time frame, we were in overbought territory. Since then, it has pulled back, which has helped reset that. I just wanted to show you a visual of what that looks like on the chart. Okay, so today the NASDAQ made a higher high, right? You can see today the NASDAQ made a higher high relative to Monday, whereas the S&P did not. So that was a clear divergence that tech continues to lead. Okay, today in the morning we had some earnings coming out of the healthcare sector. Novo Nordisk, as well as United Healthcare, and both of those were disappointing. I believe Novo Nordisk had its largest down move in years. I think it was down like 20%. Let me just check that. NVO, right? Yeah, it was down 22%, call it today. So that weighed in on the S&P and the Dow Jones, which is why the S&P was relatively weaker, as opposed to the NASDAQ. Okay, so going into more so specifics in terms of technicals, very, very clearly put, the bulls remain in control as long as the S&P is above this trend line stemming from June 22nd. The significance of June 22nd is that is the last time the S&P futures hit the 200-day moving average. Also, that is kind of where this recent resilient upswing in overall sentiment and in terms of the trend has initiated from. Okay, so you can argue that the trend initiated from April, and I wouldn't argue with that, but you could see it was kind of moving sideways, pulled back, and then once that hit the 200-day moving average, it's been a straight line to the upside from there. So stemming from there, you attach it to the July 16th trend line, and then that is, in my opinion, the line in the sand for the bulls. Okay, below that, I wouldn't necessarily turn bearish until the S&P were to breach this here. So this here, call it like 63.30 to 63.35, was previously deemed as resistance, right? You could see 1, 2, 3 failures there. Then once price broke above, it turned into an area of support. Okay, so basically below this trend line, this black trend line, into the 63.30 area, 63.35, 63.30, whatever floats your boat, that yellow circle, in my opinion, is more of a neutral area, where if it's in between the black line and the purple line, I really don't have a very solid and clear conviction in terms of where the direction of the trend is moving to in the near term. Okay, and then below the purple line, if that were to occur where the pullback goes even further below that purple line, that is where I wouldn't be surprised to see an increase in selling pressure. Okay, and if that continues, right, if that pullback does happen to take out that black line, right, and then also takes out the purple line, right, the massive level to the downside, if that pullback persists, is the 6,200 level on SPX. So 6,200 SPX, you could clearly see that there was a double bottom there. That has been a very, very important psychological whole number. Okay, so you could see NASDAQ did make that higher high, as I said today, but it got stuffed right at this critical trend line stemming from 2021. So if you attach a trend line from November 22nd of 2021 and then attach it to December 16th of 2024, that's exactly where we came up to today. So price did get above there for a little bit in the morning upon the 9:30 a.m. reopen, but it failed to sustain value and came back below. So to the upside, if we rally in the next few days, right, with the large amount of economic events, as well as the 4 out of the 7 Magnificent 7 names reporting earnings tomorrow and Thursday, there's a good chance that if they report good earnings, that the NASDAQ will take that level up to the upside, right? So if the NASDAQ does manage to break today's high, right, and moves to all-time highs yet again, the two levels that I would look for even above that are as follows. I would look at DJI, which is the Dow Jones cash or index, right? The Dow Jones Industrial Average Index. You can see this level here is very, very important. 45,030-ish. You can see that's all-time highs, as well as multiple tops, right? I call it, I don't know, 5, 6 or six different rejections there on different daily candles, right? So if you're a bull and the NASDAQ starts to go back up and takes out today's high, you want to see that the Dow Jones is also participating, because that would imply that the stock market rally is much broader. So it's not just being led by tech, but also a larger basket full of stocks. On top of that, RSP is important as well. RSP is the equal weighted S&P ETF, as if all 11 sectors in the S&P were equally weighted. And you could see that kind of has a level that lines up with the Dow Jones index as well. So 188.16 represents all-time highs on RSP. So again, if the NASDAQ does manage to make a move to the upside, as a bull, you would want to see RSP and DJI also moving in tandem and breaking above their respective all-time highs as well, just so that it's a much broader participation in other sectors and other indices. Okay. In terms of the bear case, we have this SVIX level, right? SVIX is literally the short VIX futures. So this goes inverse as the futures would. So you guys know that the higher the VIX futures go, the more pressure it puts on S&P, making it difficult for the bulls to sustain, right? We've seen very, very clearly that the VIX has been totally in bleed mode. And as a result, because it's going lower, it's taking pressure off the S&P. As a result, the S&P is resilient near all-time highs, okay? However, if the SVIX goes down, that would imply that the regular VIX would go up. And what would happen? That would put pressure on the S&P. So you can see if I draw a trend line from this low from August 5th, 2024 to this low from March 11th, 2025, that was previous support. Now, technically, resistance. So again, if this resistance does continue to reject price and price does go down, that would put upward pressure on the VIX, and as a result, it would put downward pressure on the S&P. So this is a very, very important level to look at. Bulls would love to see SVIX continue to the upside, whereas bears, market bears, would want to see SVIX go down, as that would imply that the regular VIX will go up. Hopefully that makes sense. So that's that. So again, today and yesterday, the market, the rally from Sunday night following the EU-US trade deal has gotten faded in the S&P. But again, that's not a net negative. If anything, it could be a net positive, as it's letting the bulls take a breather. Above that black line, bulls are in control, period. Okay? Below the black line, in between black and purple, neutral, and then below purple, I wouldn't be surprised if the bears really start to increase selling pressure. Okay, so definitely be on the lookout for the next few days. Wednesday, Thursday, Friday, very, very important catalysts. I hopefully this video was helpful in terms of the levels to look at going forward to help you navigate the potential increase in volatility. So that's it for me. If you guys have any questions, let me know. If you guys have feedback, I always appreciate it. Peace.